Hello, welcome back to my channel. This is Soji Forex. On this platform, we give advice and strategy on how to trade and be profitable from the bull and bear market. And in this video, we are looking at the Fibonacci trading strategy. In our previous video, we looked at Fibonacci retracement. And if you don't know what Fibonacci retracement is all about, it is important that we are recommending the video for you, that you go watch that video before you proceed to this particular video. So today we are looking at Fibonacci strategy. How do we take advantage of our Fibonacci in order to make a good entries in the market that will make us profitable? In the previous video, we discussed that we first begin by identifying our market structure. Looking at this market, this is one of the structural points of this market. This is a downtrend, and the downtrend is when the market is making a series of a lower high and a lower low. So in this video, we are trying to identify our structural point, which is our lower high. Okay, and the most structural point in a downtrend is the lower high, and that's exactly what we are trying to identify in this video. So here is our lower highs, and then we have another lower high at this level, and here we have another lower high. So we want to pay attention to the candlesticks formation that happens at this level. Let me zoom it out a bit so that we can see boldly. So looking at the areas which I just highlighted on this chart, let's take a recognizance of the candlesticks that form at this structural point. We want to look at what are the candlestick patterns that form at this structural point. And then looking at this one, you see that we have a bearish engulfing candle. A bearish engulfing candle that engulfs the previous green candle, okay, which validates our structural point 1. Also at this place, we have a formation of an evening star, which is the candle with a wick, a little body, and then with a wick. Okay, this is an evening star formation. And then here we have an inverted hammer. The buyers pushed the price to the upside, but unfortunately they couldn't take the price further, and then the sellers push it down and it closed. This gives us a double confirmation because we are having a two twin candle that are facing down. Okay, this is a double confirmation because of this rejection at this structural point. And then here again we are having another evening star formation at this level, proving to us that we have a valid structural point. And also at the same time here too, we are having an evening star. The color is not that important. What matters is understanding the reaction. Here the buyers open the price, they push the price up, the sellers push it down, and eventually it closed as an evening star. And then we have this bearish move which confirm it as our structural point. So identifying this candlestick formation give us a link on how we trade this strategy. Okay, so we'll begin by, now we have identified our structural point. This is our high and this is our low. This is our low. Okay, let's identify those points one more time by using our arrow to identify it. That at this point, this is our high, this is our low, and then we have a lower high formation, and then we have a lower low formation, then we have a higher high formation here, and then we have a lower low formation, then another lower high formation, which gives us a new lower low formation. Okay, and then after that we have another lower high formation that gives us a new lower low before we have the break of structure to the upside from that area. And so having identified that, we're wondering that why are we not marking the lower low? Because the most important structural point of the uptrend is our lower high. Once it is broken, it means the trend has changed its direction. And as such, we already know where the market reversed from. Okay, and then we'll now be using our Fibonacci to make our entry. We said we put it forward from week to week. Okay, from the high to the low, and here it is. Okay, so we eventually, with the previous video, we established that we know that the market is making a corrective move, otherwise known as a retracement, when the price action closes above the 23.6 level of the Fibonacci, and then it pull back here, closes above the 23 to the 28 to the 38, and then up to the 50 level. Okay, and we said once it closes above, when we have a pullback that is above the 50 level, which this is a downtrend now, which is our premium zone, start from 50 to 100. Then from that level, we begin to look for our entries. Okay, and above the 50, we're reaching 61.8, we have the formation of this candlestick pattern, which is our evening star. And of course, we see the evening star formation followed by this bearish move, and then we'll enter our trade. Our stop loss is at the 100 level, and then we move to the downside, and that trade played out as it ought to be. Then after that, we'll now adjust our Fibonacci to the next structural point, to our next structural point, which is what we are having here. And from that structural point, we see that our price goes beyond 23.6 of the Fibonacci, and then we confirm that, wow, this is a retracement or a corrective move that is taking place. And then look at what happened at the 50 zone. At the 50 zone, we have that inverted hammer, that double rejection, which gave us the confirmation that yes, we can enter since it is our premium zone. And then we make our entry, and then beautifully our TP is at this level, and then we see that the price, they play out as analyzed. Then we move our Fibonacci to the new low that was formed, the new lower high and the new lower low, and then we wait again. When we see the price crossing beyond 23.6, it is confirmed to us that the price is actually making a retracement. Then on reaching the level of 50% of the Fibonacci, we begin to look for opportunity to give us entry. Okay, in this video, we are only considering candlestick formation as our entry signal, or our entry trigger. But in the subsequent video, we'll be looking at other smart money concepts, unlike the order block, the imbalance, which is the improper price action. We'll be incorporating all of that into kings and queens order block, into giving us the entry that we desire, and that will be in the subsequent video. And then we see that it gives us an evening star formation, and wow, it plays out again. And then this is our next structural point, and then we are marking it out already. Then we have our level marked out to this low that was formed, and then from this point we begin to observe again. The market goes beyond 23.6, and on reaching 50 level of the Fibonacci, it gave us another evening star formation, and then the trade played out again just as we analyze and hit our TP. So this is how to go about it. It is simple and it is straightforward. This is how to trade the Fibonacci strategy. This is part 1. In the subsequent video, in the part 2, we are going to look at how we incorporate smart money concept. Just as I've said earlier, we'll be looking at the order block, the order flow of the market, the imbalances, the improper price action, and then we'll also be looking at the queens and the kings order block, and we'll see how we incorporate all these things to make us a successful trader. All right, so please, I know you are getting value from this video. The system or the strategy is simple and straightforward. It is not a complex one. So please do not forget to like, to subscribe, and then do not forget to turn on your notification button so that you get notified whenever we release our subsequent video. Please, if there is any strategy you want us to make a video on, you can do so by dropping it in the comment section, and that will be attended to. Thank you. See you in the subsequent video.